Namaste. You know I'm Vasant Ponkshe, a retired bank officer from Bank of Maharashtra. And I'm coming before you with my video number 2 of series number 4, in which I'm trying to deliver the information about the technological disruptions which are likely to take place in Indian horizon in coming next 3 to 5 years, and how it could be a boom for the customers, and how bankers will have to prepare themselves, and even the bank officers and bank employees will have to address the issues which are going to emerge. In all, I have tried to identify more than 20 to 25 technological disruptions which will hit the Indian economic and financial system. I'm not claiming that I am an IT expert, nor I'm claiming that whatever is available in the world, whatever is happening at international markets, as far as technology disruption is concerned, I'm covering everything. But I have tried to pick the most important likely disruptions as per my perception, and I'm presenting these disruptions in a general way. I'm not going to go into deep into how the disruption will work, what is the technology behind that, and what would be the platforms and all these things. These technological issues, though I have read in depth, but I'll not be covering those issues over here because that will create the length of the videos too big, and that is why I'm just referring the nature of disruption, how it will hit, what are the benefits, just like a SWOT analysis. So with this, let us start video number 2 of my series 4 about the technological disruptions which are going to hit the banks. The first one, they say, is, and most important, is that fraud detection and fraud prevention. As we all know, the latest RBI report has informed that the crores of rupees of frauds have taken place in banks. One figure indicates that more than 71,000 crores of frauds have taken place in a bank just within 1 year. And the report says that many of the frauds are digital frauds, and they constitute significant threats to the system which is prevailing. And this technology for fraud detection will be using machine learning solutions. Those solutions will be able to track and analyze the spending pattern, the spending location from where the IP address and location from where the transactions are taking place or frauds are taking place. And it will cross-check the behavior of the clients using mobile banking, internet banking, and such other digital payments and bankings. And accordingly, after studying the behavioral pattern within seconds or within minutes, they will be able to try to indicate to the bankers as to what could be the likely entries or likely transfers as far as frauds are concerned. Now, new transactions can be compared with the best profile. The system will create a profile of each of the customers, and the transactions, they will be recorded. For that, chat blockchains and all these systems are already available. Those will use data in the data bank. And every transaction will be cross-checked to ensure that whether the transaction which has taken place is in tune with the profile. And that is what is called as machine learning, which will be using artificial intelligence. And this technology is going to carry lots of importance in coming days in banking, and the bank officers, those who want to learn something into that, I'm sure they will become most indispensable bank officers in the system. We'll go to second one, that is anti-money laundering. That technology also will carry lots of importance because government role is there, and the government also wants to continuously explore new ways to fight money laundering. The laws are there in place, but the technology, if it is used for money laundering, government has also a stake in it. Government also wants to curtail them, and bankers have a primary role to play in this. And in that case, the timely action of laundering activities is the most challenging aspects. Once upon a time, they used to say that frauds cannot be averted. But early detection of fraud is a guarantee for avoiding further frauds like that. So anti-money laundering machinery or technology is going to be creating most important impact in the financial institutions. Now, what they say that these institutions, including banks, maybe NBFCs, maybe payment banks, small-scale banks, they will have to monitor the defaults of their customers, and they will have to check whether they are a part of any money laundering. And this AML solutions, they call it as anti-money laundering solutions, they will be enabled by way of artificial intelligence and machine learning and machine memory technologies. Everywhere it will come in future apps also. And the most important trait here for the manpower is concerned, that they say that with this technology, the intervention of managerial cross-checking will be replaced. This technology will replace manual process, and the system will show real-time automated signals will come if the system finds that there is a likely entry of money laundering. And the vast amounts of personal data by way of KYC and other things will be reviewed by the system from time to time, along with the transaction history, and a better picture shall be created for regulating for the banks and for the government also. And the most important part would be the identification of intricate patterns of that machine learning, which will be used by way of algorithm helps, and that is how they say that the system will be kept in place to reduce the number of false positives without compromising any regulatory observations. Now we move to the next technological disruption which is likely to face. They are saying personalized banking. The customer experience is an integral part of each of the industry. Everyone knows customer is a god, customer is always right. And today's young generation, which is dealing in the digital technology, they want to have everything in terms of digital experience. And the AI shall be able to give personalized experience to these young generation customers through IVR models and mobile banking, internal banking, email communications, all type of service, along with the sending alerts about their transactions, sending alerts about their unusual activities taking place in their account. That is how the young generation and tech-savvy persons will be given best of the best services, and that is how personalized banking is going to rule the system in near 4 to 5 years period. And these activities with full security will ensure that the direct debits of the bill payments also will be allowed or would be encouraged, so that the safety is ensured. Now we move to the next one. What is that? That is digital marketing. Today every bank has got their own marketing team, their own marketing officers, their own marketing clusters and all that. They are working, they are preparing plans and all that. But now they say that the days ahead are that of digital marketing. And the institutions, those who are having a big data, and the unfortunate part of it, as far as the Indian banking system is concerned, the entire data is unstructured. It is not compactly set properly. So analyzing that data is becoming difficult. And to build operational efficiencies by using that data, by analyzing that data, is becoming for the banks and financial institutions in India, which is not the case abroad. So again, artificial intelligence and machine learning solutions, they will help suggesting the offers to the customers. Now the customer behavior will be learned by AI and machine learning, and they will try to read the mind of the customers, and they will offer the products to the customers on digital platform even before customer demanding it. So they could read the mind of the customers, and through mobile apps, through SMS, through emails, or through different locations and through different outlets, the systems will be offered, and the customers across all devices, may it be laptops, may it be mobile, may it be other devices, at all the time, anywhere, all type of deposits, the marketing shall take place, and at the same time analyzing the data shall go on, and as a result of that, offers will be thrown in the inbox of the customers, and the trick of those offers will be for limited period. So it is going to be a mind game. So this analysis, how impatient the customer is, how impatient his behavior is, how likely he will fall in the trap and pick up the offer without thinking much about all these things. And with the use of this digital marketing, the cost cutting will be there. Marketing cost will be reduced, the advertising cost will be reduced, and different media expenses will be reduced. And here also there is a scope for reduction in manpower, because whatever human marketing officers used to do, it will be replaced to a large extent by the digital marketing. Next, we will go to digital payment. In Indian banking scene, we are seeing it is already there. Digital payments we have seen. But as per one of the estimates, they say that the payment markets in India is projected to be of $1 trillion. Imagine. Our economy is ranging in between 2.5 to $3 trillion, but they say the payment market in India shall be of $1 trillion by 2022. And regardless in the rise of the number of platforms, the payments will go on, digital payments will go on, and in India there is a long way ahead to penetrate this market, because literally issues are there. Mobile banking will be used for payments and all these things. And we know there are more than 80-90 crore mobiles, but not that all the persons are literate. And one of the recent report of RBI is indicating that out of the survey taken by them, out of 75,000 customers, they found that only 28% of men and 21% of women are financially literate. So imagine how deep penetration scope is available. And it will take place mainly in Tier 2 and Tier 3 cities. Metropolitan, it's okay. Urban, it's okay. But this wave will go of digital payment in Tier 2 and Tier 3 cities, where at present, bankers don't have any competitors. Bankers, they say that rural and semi-urban branches are their backbones, and there is no competition for them. Their banking correspondents are operating. But this system of digital payment will make inroads in Tier 2 and 3 cities, and that will ensure safe, swift, and secure payment system to all its customers, even in the rural, semi-urban, and remote areas. Now, next important is going to be, it will make a huge change in the system, and that is called ROBO Advisors. It's a new concept in India. In some cases, it is taking place. We know in medical there is a robo technology used for the very calculated and skillful operations and all that, but that is not the topic of our video. So ROBO Advisors are the digital platforms that provided automated algorithm driven investment services, where you should invest, how the market is playing. These algorithms will be used and the systems will be operated, and the ROBO Advice will give quick solutions by learning and evolving its own trustworthy intelligence services. So that will be a great job Robo will be doing and creating inroads in the Indian banking and financial systems. And this artificial intelligence enabled Robo Advisors can provide more services than you can expect, and more penetrated, more perfect, more effective, more quick, and more accurate services they will be giving. So in different areas, the Robo Advisors will play lots of role, and what we are studying as bank people, studying the data and taking the cues, and then take our own time, then have our own meetings, monetize that, and then decide about the new products and new platforms and new investment strategies and all that. But the Robo Advisors will do all these things for the bankers, and imagine that the brain of the bankers will be more or less kept idle, and Robo Advisors will come into picture. Then another important thing is credit decisions. We all know as bankers that bankers are averse to take risk. That is what the RBI has said, that bankers are averse to take the credit risk. Credit is not being dispensed. Even the smallest deviation that the bankers are resisting or avoiding to dispense the credit. But in this case, the credit decisions will be given by the softwares which will be developed. And many of the companies and banks will have to extend credit-based clients' profile to market their own data. So it's just like an outsourcing of credit decisions to a machine. And generally, bankers would not like to give this work to the machines, but the system will be such that the softwares will be such that the pre-approved profiles or pre-approved products or schemes will be prepared by the system, which will be customer specific depending upon the data available. And the robotics process of automation will take care of the credit decisions. KYC will be cross-checked. Today we are engaging the different outsourcing companies for cross-checking the KYC. But credit decisions will be taken by way of RPA, they call it as a robot process automation. This AI and machine learning disruption shall increase like anything, and it will have a more significant economic impact, not only on the banks, but it will have a major role to play in the total economic impact. And from enhancing the customer experience, extending more and more investment opportunity to the customers on the tip of his mobile, preventing fraud, that is going to be very important, and mitigating investment risk. All these things will be played by this technology, and these technologies will have a potential to revolutionize the entire system. I'm finding it difficult even to pronounce this. So to that extent, revolution will come, and it will help the improvement in the financial health of millions of people in the country. We talked about the financial literacy, but the financial health, who will take care of that? So this disruption will take care of the financial health of the banks and financial health of the millions of the people of the company, of the country. Then there are some topics about the fintech innovations. P2P lending, it has already settled to large extent in India. There also robo advising shall take place, and financial institution will take lots of benefit of that. Then actually we will come to actual artificial intelligence. Now they say, although banking and financial services tend to solve or adopt new technology, a study has indicated that the reputed companies, they have confirmed that majority of the financial services of decision makers are investing in artificial intelligence. But they say that the 52% of the executives interviewed and 72% of them, they believe that using AI shall prove to be a great business advantage. And as per one of the estimates, they say that the potential for this industry of using artificial intelligence, developing AI, is expected to go beyond $450 billion within the next 3 years. You imagine the range. The AI business shall go beyond $450 billion just within 3 years. That's why I'm talking about the disruption which will take place just within 3 to 5 years. So the most visible way would be the banking industry, which uses artificial IA, and the customer service and chatbots will be synchronized with that, and also robots will come into picture. And as far as international level is concerned, many of the financial institutes abroad, like Bank of America, JP Morgan Chase, they have already streamlined the system, and customers are very happy. Because of this system, it will facilitate mobile banking 24/7. We are observing that in India it is already there. And AI shall also be instrumental in many financial institutions to enhance their security and prevent and detect the frauds. So that also will come. And there comes the angle of risk management. So AI shall be used for the risk management. Lending decisions, as I told you, will be taken with the help of this, and big data analysis and robotic process automation, RPA, what they call, and one voice interfaces, they will come into picture, and that is how the artificial intelligence will create a great impact on the Indian banking, and which will change the job profiles of the bank officers. Remember, mark my words. Then components of artificial intelligence and cognitive technology. This is the new topic. What is cognitive technology? The artificial intelligence which has produced the cognitive technologies, they will ensure that the individual shall get better performing specific tasks, and the humans used to be able to do. The tasks which were being done by the humans earlier, those will be done by the machines now. And what are the important facets as far as the public sector banks are concerned in this regard? What they will have to focus their attention on, that natural language processing, based information extraction and speech recognition. That is more important. So many languages are being spoken over here. Then natural language generation shall be a challenge. The bankers will have to look into that. Then machine learning and natural network and deep learning will have to be evolved by the bank. Then banks will have to have a computer vision, image recognition, cognitive computing solutions, then various offers for various capabilities, and use of the technology to ensure that the machine is providing the guidance which otherwise human brain used to do. So they will be more smart, quick, accurate and efficient. And by that way, smart banking shall embrace naturally the AI and cognitive technology. This is the new concept which is yet to take deep roots in banking. And what would be the four important categories as far as this inroads are concerned about the cognitive opportunities? That is engagement, automation, insight, you have to have insight, and sensing and shaping the strategies. These will be the key services, and that is how it will operate. Now we will go a little away and we'll try to see what could be the multiple channels available. Many of those channels are available in India as on today. First and foremost is branch, then call centers, then ATMs, we all know, then mobile banking, we all know, then POS machines, we all know, banking correspondents, we all know, internet banking, digital banking, phone banking, and more apps. Now the different apps will also come into picture by using analytics, by using artificial intelligence, by using robotic process automation, and by studying the data. New apps will come into the market. Then we'll come to the most important. It has already come in India, but the World Report says that India is too backward as far as blockchains are concerned. What is blockchain? We all know. Blockchain is a decentralized ledger or a list of all transactions across peer-to-peer. So those who want to adopt or get into touch of that technology, the participants can transfer the entire value data across the other participants, and that can create a blockchain distribution ledger technology, that they call it as a DLT technology. This technology was first used in cryptocurrency, I told you in the last video, and it has been distributed, it has distributed the database, and the blockchain can keep the tracks of the transactions in a variable manner, in a permanent way. And the Harvard Business Review, it has predicted that the blockchain will disrupt banks the way in which internet disrupted the media. We all know media houses, they were big, but now every information is available in media. News items are available in media. Various videos are available in media. So internet had disrupted the media houses. That is how the Harvard Business School review, it is saying that the blockchains will disrupt banks. So these ledger keeping, entries, managing entries, remittance, compilation, study, generation of reports, and all these things, blockchains will take care of all these things. And this technology is very transparent, highly accurate, highly secure, and it is relatively very cheap. The cost involved in the blockchains will be so cheap that it will replace many machines or many human beings, those who are required to maintain the data and maintain the record for analysis. Now this blockchain can support the banking in different ways. The Bitcoin has shown the way, and now they say that even the blockchains can be transformative, and capital market, they will tokenize the traditional bonds. So traditional bonds, they will be replaced by tokenized. The RBI has already come out with one or two guidelines about the tokenizing and all that, but this is not the topic of this video. And they say that the blockchains would remove the gatekeepers and third parties in the loans and credit systems. So gatekeepers will be removed, third parties will be removed, and blockchains will ensure to borrow money at low rate of interest, because they know where there is a plus, where there is a shortfall, and where the funds are available, where there is a need. So the study will be done by the blockchains, and money will be available at the lowest rate of interest. And these blockchains will also eliminate manual data reconciliation for the bank ledgers. Imagine no manual intervention, no manual reconciliation, no data ledgers. To that extent, these blockchains will take charge of the entire banking system. Imagine how the profiles of bank officers will change, and the way information and money exchange through all this system, it will alert the smart contracts and operate from the blockchain technology. It will take quick, accurate, and fast decisions. Now they say last year alone, 13 blockchain companies have obtained more than $365 million funding. So more and more blockchain companies are coming forward. They are getting good customers, and their revenue has gone to the extent of $365 million in just last 1 year's report is there. And now new thinking, though it is not directly related with banking, they say that the blockchain technology can be used in voting. In a country like India, where we have 130 crore population, crores of voters, so it can be used in voting, then it can be used in automotive services, and more importantly, blockchains can be used in healthcare also. That is the additional information which I wanted to give as far as this blockchain is concerned. Then, as I told you, the report says that India is way behind in use of blockchains. But as and when Indian banks, Indian financial system, Indian government, different state governments, they will use blockchain technology. But mark my words, the human intervention will be less. The ledger keeping will be less. Reconciliation will be less. The services will be given quickly without human intervention. And as I told you, many of the AI and robotic advisors, they will work like a human brain, and the job profiles of bank officers will undergo a huge change. With this, I conclude part 2 of this video series. There are 2 more parts to come. In remaining parts, I will cover another around 15 to 16 technological disruptions which will create avalanche after avalanche in the banking system. So I'm doing my job, alerting you. I'm doing my job. This is not to threaten you, but this is what I'm doing to tell you as to what is going to happen within the next 5 years, and try to be relevant. For that, you will have to go through all the 4 videos on success mantra, how to remain relevant and how to ensure that you are in the job for another 25-30 years. With this, I conclude. Thanks for watching this video. Here, I conclude part 2 of this video series 4. Await for part 3 and part 4 shortly. With this, thank you. Goodbye. See you again.